Better than expected inflation fuels the stock market higher. The Consumer Price Index, also known as CPI, showed inflation was up 2.9% compared to last year. While this was in line with expectations, it was the core CPI, which excludes food and energy's annual rate of 3.2% that beat the expectation of 3.3%, and that's what likely excited the market. This report also followed the Producer Price Index, which was largely in line to slightly better than expectations. The annual rate for both headline and core PPI rose 3.3%. Looking closer at the CPI though, shelter continued to be a heavyweight considering it makes up about 1/3 of the CPI. While it registered the smallest one-year gain since January 2022, it was still at a high rate of 4.6%. It's important to point out that if shelter was excluded from the core CPI, well, the annual inflation rate was just 2.1%, which is right in line with the Fed's 2% target. I believe there will be a lot of movement in various price groups this year, especially with new government policies in place. With that said, I do believe it is much more likely we continue to move towards the 2% target rather than seeing a sustained reacceleration in inflation. This leads me to believe we will not see the Fed hike rates this year, and I still think it is possible to see a couple rate cuts come December 31st, 2025. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.